Christmas is a time of joy and generosity, with most of the world looking forward to the year-end holiday season. These festivities are also highly significant for the typical investor, considering the boom many businesses face during the season. 2022 has largely been defined by macroeconomic turmoil, uncertainty, and high inflation. Despite these conditions, however, the developed markets are likely to continue spending heavily during Christmas. Buying a strong stock now, that is likely to excel during Christmas, exposes one to a predictable revenue boost, and also enhances the upside potential on one's overall investment portfolio. A number of industries are included within this phenomenon, which include children's entertainment, food and beverages, tech product companies, as well as railroad and shipping. In order to prepare for surging holiday season demand, these companies typically ramp up production and increase hiring to a significant degree. Keeping true to the spirit of the holiday season, in this video, we present our viewers with 5 great stocks to buy before Christmas this year. The first stock on our list is the small, but high-growth toy company, JAKKS Pacific, which trades under the ticker, JAKK. The toy industry is an obvious investment category to turn to, when looking at Christmas season stocks, given the high spending on children's presents. JAKKS taps into the craze of the gaming industry by making collectibles, replicas, and action figures of popular games such as Apex Legends. Its business strategy is to expand to some of the most popular names such as PUBG, Roblox, and others. In addition to children, this market also taps into professional gamers and adult collectors. JAKKS, with its market capitalization of almost $180 million, is far superior to its much larger and more mature peers, such as Mattel and Hasbro, as a result of its high growth potential. In its most recent quarter, the company almost doubled its revenue from $112 million to over $220 million year-on-year. JAKKS, with its annual revenue growth rate of over 35%, therefore, is a much more compelling investment than Mattel and Hasbro, which have growth figures of 13% and 9% respectively. In terms of PE ratios, JAKKS is severely undervalued, which makes it a prime target for an attractive takeover by a much larger player such as Disney. The Christmas tailwinds are also anticipated to give the company a major boost. The company expects EPS at the year-end to total $3.62 per share, against the prior year's figure of $2.59. For the reasons emphasized, JAKKS Pacific is definitely the toy stock to invest in now, which will allow your portfolio to soar with the generous Christmas time gains. The second stock on our list is the renowned American retailer and wholesaler, Walmart Incorporated, which trades by the ticker, WMT. There is hardly a better business to bet on to experience a Christmas performance boom than Walmart. The company has been aggressively expanding on the e-commerce landscape over the years, which makes it a prime competitor to Amazon. Since 2017, Walmart's e-commerce sales have been growing tremendously, with a compound annual growth rate of 33%, whereas Amazon reported a 4.3% decline in its most recent quarter. These shifting dynamics point to how Walmart is far more likely to take the cake this Christmas season, compared to Amazon. Walmart is a far better pick for investors, considering its higher EBIT margin of 4% against Amazon's 3%, as well as its superior return on total assets of 5.6% against Amazon's 2.8%. Walmart has also been transforming very much into a tech-oriented company, after its acquisition of various robotics companies, as well as its fast-expanding drone delivery program. Above all, Walmart remains the king of brick-and-mortar physical retail, which holds a clear advantage during Christmas season shopping. WMT stock is down by 10% in the last 6 months, which makes it ripe for the taking at present, before the inevitable Christmas boom. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Number 3 on our list is the transportation and logistics giant, FedEx Corporation, which trades by the ticker FDX. Given the global scale of Christmas spending, the transportation and delivery sectors experience a boom as tremendous as any consumer company. This is because not only does e-commerce activity see a tremendous surge, but existing businesses outsource deliveries and supply-side transportation in order to match demand. FedEx is by far one of the best names in the transportation field to stick to this Christmas season. In May 2022, the company delivered $93.5 billion in total revenue, compared to the prior year's $84 billion. Management is also cheering the company's easing EBIT margins, sure to further enhance profitability. Despite this, the market is down by over 40% from its yearly highs given recession fears among investors. As a result, FedEx has a P/E ratio of 8.36, which is a record low since the Great Recession of 2008. Even during the financial crunch back then, FDX exceeded expectations, given its wide, stable moat, which is drastically more refined today than it was 14 years ago. Over the years, FDX has established a business that cannot be replicated, by developing a robust and complex logistics network, with valuable relationships in the global B2B realm. With almost 700 aircraft, 5,000 operating facilities, and over 500,000 employees, FedEx has made itself too big and vital in logistics to fail. FDX is viscously undervalued, but is bound to take on a rocketing upward correction, with its performance boost during the holiday season. Analysts expect hypergrowth in the coming years, with compound growth to exceed 12% through 2027. Next up, we take a look at the small-cap mobile gaming company, Playstudios Inc, which trades under the ticker MYPS. The company's business model is based on in-game purchases along with advertisements. Its total revenue stands at $287 million in its last annual report, which is slightly higher than its prior year figure of $270 million. Although growth has been slow, it has not been so due to weakening fundamentals, but rather due to wider economic and behavioral trends. The fundamentals are in fact rock solid, especially since in the most recent quarter, daily active users grew by 17%, whereas monthly active users grew by an impressive 54%. This means sales growth is down due to economic pressures, and could bounce back drastically upon improving conditions. Christmas time spending, when mobile game purchases are known to climb substantially, is likely to deliver a much-needed boost to the company. Profitability has also been growing impressively for Playstudios. In its most recent quarter, it saw its EPS figure climb year-on-year from -7 cents to +4 cents. It beat expectations that suggested a -1 cent guidance for the company. The stock is one that is massively undervalued and is due for a substantial upside correction, with the year-end holiday season being the perfect catalyst. Its PS ratio of 1.76 is significantly low, especially when accounting for its revenue growth over the years. This makes Playstudios an ideal takeover candidate, especially considering its recent acquisition of Tetris exclusive rights. This may be one reason as to why the company's CEO continuously has been heavily purchasing MYPS during the year, even during dips. This stock is ideal for those seeking a large Christmas time price boost. The final stock on our list is the innovative tech dragon itself, Apple Incorporated, which trades by AAPL. Apple is a highly profitable company with an EBIT margin of 31%, far higher than the average IT sector margin of 7%. The company faces several catalysts that could see a Christmas boom this year, with a far greater magnitude than seen in years. The iPhone 14 Pro is one of the biggest reasons for the stock's short-term attraction. Its game-changing dynamic island camera notch, which is the most hyped feature addition since facial recognition, proves that the company still has its Steve Jobs-era innovative spirit. Apple also recently released the Apple Watch Ultra, which immediately jumped to the #1 spot in the global smartwatch popularity index, according to Counterpoint Research. Its ability to blow out the competition on account of its brand name itself is highly valuable from an investor's standpoint. Another example of this is its AirPods product lineup, which on its own boasts sales higher than the total revenue of many Nasdaq-listed companies. All these aspects make Apple devices the go-to tech products this holiday season. The latest iPhone version is going to cause a serious disruption in the smartphone playing field. Unlike the prior year, however, this time, Apple products are likely to be highly popular among Gen Z members. The investment banking giant Piper Sandler recently published its findings, that up to 88% of teenagers want an iPhone model as their next phone. Despite its massive size, Apple still boasts double-digit growth, with top and bottom line improvements standing at 11.6% and 18.3% respectively. This stock is a no-brainer for the Christmas season. That's all from us in this video. We hope the insight we aimed to deliver has proven valuable to you, and would allow you to ensure your portfolio is well prepared for the Santa price rally this year. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to check out our website, stockstelegraph.com.